Welcome back to the final round here on Yahoo Finance. Miles Eldon with you in New York. I'm joined now by Akiko Fujita and Yahoo Finance columnist Rick Newman. Also joining us from Salt Lake City is Jason Ware, the Chief Investment Officer at Albion Management Group. So we are just moments away from the closing bell here on Wall Street. Going to be a down day on the street. All three major indexes in the red right now with about 20 seconds to go in the trading session. This after the markets, or at least the S&P and the NASDAQ, hit record highs on Wednesday. Some earnings disappointments over the last 18 hours. Of course, Boeing shares really weighing on the Dow. So not a record today, and we are waiting for those results that we will get from Amazon, from Alphabet, from Starbucks in just a minute or so. There it is, closing bell from the floor of the New York Stock Exchange, the NASDAQ market site. We'll see where we settle out here. But right now, in just a little bit of a holding pattern. Jason, let's go to you quickly just to talk about, before these numbers come out, which we expect to be imminent, what you're looking for, at least from Amazon and from Alphabet. We were just talking a few minutes ago about how it's kind of a show-me quarter from Alphabet after a pretty disappointing first quarter report.
Yeah, I think you're exactly right. And, what we're looking for is basically a reacceleration of some growth for both companies. While both are still growing at a nice clip and have secular tailwinds at their back, Amazon in e-commerce and cloud, and obviously Alphabet in digital advertising and video, both of them had slower growth rates in the last quarter back in April than they had in many years. Google, for example, grew at about 17%, which was the first sub 20% revenue growth print that they put out since, I believe, 2015. Amazon had the slowest growth quarter since around the same time frame, 4 years, I believe. So I think investors want to see a bit more of a pickup in growth to help them feel more confident about these stocks over the near term.
Hey, Jason, Rick Newman here in New York. Does Google's revenue from digital ads, does that reflect the broader economy? In other words, if we were to see a prolonged slowdown there, would that tell us about something that's happening in the real economy?
No, that's a really great question. And I think the answer there is no, but with a bit of nuance. So again, Google is benefiting from, in the digital ad space at large, is benefiting from this secular transition from traditional ad platforms and ad mediums, obviously like magazines and print and billboards, et cetera. And everyone wants to go online and be online. And I think that's a long wave growth story that Google and Facebook and now Amazon to some degree are all benefiting from. That said, I think there is some cyclicality in terms of ad budgets. So if we were to see the economy slow down or we were to get a downturn in an economic recession, you might see a little bit of that trimmed back. So I think the growth rate slowing would be something that investors could expect, but I don't think a cessation of growth or it going negative would be something we would anticipate. So again, good secular growth story with a little bit of secular bump from when the economy is doing well.
Jason, while we've seen investors continue to pile into tech, when you look at the last quarter, it certainly points to a broader narrative in the space in terms of deceleration in growth, whether that is with Alphabet. We even heard from Facebook's CEO yesterday talking about more pronounced deceleration in Q4. For them, it was more about for users being able to opt out of targeted ads. There's no question, regardless of where the regulatory discussion is going, some of these companies are turning more cautious. So why do you think investors are continuing to turn to tech?
Whoa.
So I think in an environment where real economic growth at the macro level is slowing, again, we had about 3% growth in 2018 on the back of some tax cuts and deregulation, but that is now reverting back to the cycle mean, which is probably more like 2.5%. So if you believe the global economy and the U.S. economy are slowing down some, and you're looking to invest in areas that still have really good growth stories, and again, some of these secular growth stories, then I think that's where you're seeing the money flow to, and it's why these large cap technology stocks continue to be accumulated by investors, is because on the merit, if you just were to strip out what's happening in the macro economy, these businesses are growing at mid-teens to low 20s rates of growth, and that's hard to find anywhere else. So I still think they command a premium and investors' attention as a result.
Of course, we are standing by now, waiting for those results from Amazon and from Google's parent company, Alphabet. Of course, looking at where the market settled today, a down day for the NASDAQ overall. Facebook weighing on the sector overnight. Of course, Tesla shares were also down about 13% in the trading session.